what is the goal? You have an Excel sheet where every day you get a couple of pips, and that's how you start compounding the account, right?
So let me show you my two favorite spreadsheets real quick. And I'm so glad that you came out and talked. You can use it for futures. I'm technically using it for futures right now, but you can use it for forex, for stocks, for whatever. This one is called the Monte Carlo spreadsheet. My favorite because it's very, very down to earth. But I'll show you both spreadsheets. So for example, assuming you're trading your own live money, is that a good assumption, or a prop firm money?
I'm gonna start off with demo money first.
Smart, I like this. But let's say you have 1,000. So I'm gonna go off of our own live money for a second. Obviously, this is very high risk. We probably wouldn't be doing that, but if you're trading on futures, you have to do a lot of risk. So we're gonna say $1,500. We're gonna say 5%, because remember, even on micros, you really can't risk a lot less than 5% on futures, because you just can't. For forex, you can, but not for futures because of how they're contracted. But let's assume a 65% accuracy rate. That's pretty doable, right? That's not saying you have to be right all the time. Now, granted, the 2.3 to 1 means you're averaging that. So since you're pretty new to us, we have a tool. It's not mine. I didn't create it. The guy who did is amazing, but it's called an ATM. It's a trade manager. So where I'm getting this data from, just so is based off of using that trade manager on MT5. And let's say I take an entry, it manages me, this one I get a 7 to 1, which is only going to happen 5 to 10% of the time. So just being very honest. The rest of the times I'm going to get knocked out at a 1 to 1, a 2 to 1, a 1.5 to 1, etc. So when I say it, I'm not saying I get this on every trade. I'm saying in a batch of 70 trades, I can average that because I have a few outliers that happen to be like this, right? An outlier 7 to 1, that's a 5 to 1. This one's only a 0.09 to 1 kind of thing, right? So just to give you an idea. But anyways, assuming you have a pretty good risk to reward ratio, is that in layman's terms, that's turning $1,500 into $80,000 in seven-ish, I think it's 72 trades. That's what this spreadsheet is doing. The reason why this one is so special to me is this factors in the randomness of losses, because you don't get to control where your losses fall. Everyone likes to show, I have 100%, you are a liar. You can have 100%, I have 100% some weeks, don't get me wrong, but your losses and strings of losses do happen, but you'll have this period where you just get this string of losses. So this formula, it just drops your losses anywhere. So it's very randomized in terms of loss, averaging out to be 60. This simulated win rate is 66%. But it's kind of cool. Notice I'm not going to change any of this stuff, right? $1,500 starting balance, 5% risk per trade, 65% win rate. That's practically doable. That's going to be the hard part of this equation. But now watch what happens when I hit, I'm going to basically force the spreadsheet to recalculate over and over again. Maybe. I'm going to try that again. There we go. So keep your eye on this box. So we got 40,000, 112,000. Oh, this one's only 30,000. The reason why this number is fluctuating so very much is because we don't get to control where the wins and losses fall. If all of your losses happen to fall down here where you're using the biggest lot sizes, it's still technically a 66% win rate, but they fell at the wrong spot. So this is really cool. This is fun for me. It's like a video game. I'm kind of a nerd like that. Like
Is this accessible to the members, this spreadsheet?
Yep. So let's look at worst case scenario. The smallest number I saw was 26,000. I think the biggest number was 114-ish. Oh, there you go, 16,000. This is a pretty bad trial. This is 50% accuracy, not because this is wrong, but because in a basket of thousands of trades, sometimes your average over this 100 is going to be smaller than your averages in general. So either way, turning 1,500 into 16,000 is not bad, but this is just as possible in 72 trades as this is. It just matters where those wins and losses fall. And if you can follow the system, the model that you design based off of the risk and the reward, the way you say you're doing it.